Good evening, everyone. Today is the 23rd, Wednesday, 2016. Just wanted to make a quick video. A day ago, or yeah, I guess one day ago, I received this question from a viewer asking for my rules, methods, and whether I have a blog or not. So instead of typing, I'm known to just make a video because it's easier for me to just talk about it rather than typing. So I apologize for that. I'm just kind of lazy when it comes to typing. So here are my rules. So I just went ahead and I plopped it down. So okay, so I have two sets of rules. One is for trade management, and the other one is rules while I'm on a trade. So trade management is a way for me to, the reason why I put these rules together, something I can adhere to, something I can nail into my head, and the the irony of trying to work for your own is you don't have a boss to tell you what to do. So therefore, as crazy as this sound, I'm telling myself, kind of managing myself, if that makes any sense. So I try to write these rules down, and every morning I look at them every day religiously. So this is what's keeping me in the game. This is keeping my account alive. So and I will notice that I'm not perfect. When I do break these rules, I tend to pay a huge price for it. So and believe it or not, they're super simple. Three rules. Try to keep it as simple as possible so that way I can remember it. So the first one is no more than 20 ticks per contract per trade. So basically, my biggest risk that I could take is 20 ticks because I do have 40 ticks, or essentially $400 a day of acceptable loss. So if you look at this in terms of business, you would that's basically all my business can handle for loss on a given day, right? And like I said, this is part of the way I'm managing my account for the day trade account, not the swing trade account, but this is kind of the rules that I put together so that way I don't lose my shirt in a given day. And believe me, I had many instances to where I have lost my shirt just because being stubborn or violating these rules. So um, I do I do try to follow them as much as I can. So and then the third one finally is that the three losing days in a row I shut my machine for the week, meaning basically I'm just not in sync with the market. So that would give me at least some time to either uh, kind of reflect on as far as the reason why I lost, or I can just keep trading, but in a simulated environment rather than real money. Like I said, the 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 trick to this game is basically to survive, and without money in your account, you won't able to trade. So either that or you're always going to be on a simulated trading. So there is a huge difference between real money versus simulated money. You tend to care more if you're trading a real account, and also it's a double-edged sword. You tend to get scared more just because it's real account. So and that's only on the losing day. If I'm winning, then I do keep my winning days until maybe my fourth, fifth day, or until I get cocky. Sometimes I think I had a like a if I remember right, I have I think 12 winning days in a row, and I noticed that you know when I get to that long of a winning streak, I tend to get cocky, and I forget to just humble myself while I'm trading, and then I guarantee you I'd lose my shirt on the 13th day. So I think if I remember right, I did win 12 days in a row, and I I think we might have lost half of that 12 winning days just because I got cocky and I'm trying to make my own money, so or get the money back. The win your money back mentality is a dangerous mindset you could ever have as a trader. So I do have those things in mind when I trade. So this is how I manage my account. These are the three rules that I have, and like I said, the goal is not to be difficult. So three rules, easy enough. Then I'll move on. My other set of rules are really for while I'm on the trade rules. So basically, these are this is different. I mean, obviously it's different while you're on a trade, and basically the way you would manage your account. So while I'm trading, if I decide to enter in on a specific price location, I I try to manage it best I can. And my first rule is, if it goes 10 ticks in your favor, then this is kind of my a decision point of whether it is appropriate to move my stop to break even plus one. And typically I follow this, but sometimes, when there will be days to where you're better off just leaving your stop where it is, and just let it kind of wiggle through, because there will be certain days like contract rollover, where it'll be really wicky, and all the buying and selling is literally happen between the very top of the price or bottom of the price, high and your high and lows. And when those kind of days, I tend not to overmanage my stop. So at that, because of that, at least I have a rule on when I could manage it. So there is a danger of over managing your stops, and a lot of it. The reason why this number one, the reason why I have it there is because, just in case, I don't know how many times I've seen it to where I'll move it to break even plus one, and it'll take me out of my trade, and then it'll just go in my direction. And that is the most frustrating thing to see at all times, because I don't know how many times that happened to me, but I'll get stopped out, and then they'll just go to my direction. And then at that point, if you get stopped out, you get to read. My second rule is, at least not trade on the same trade location, because it's a good possibility that you're in the wrong trade location, if that makes any sense. So my second one is, this kind of cures my my over trading at this point. Just I just really try to wait out the price until until maybe 10 minutes later. So basically what I'm trying to say here is that, if I get stopped out, then I have to get my hands out of the mouse. It keeps me away from trading again, thinking that this is, sometimes my mistakes are mainly because, just going back to journal and just historical trades, is that, if the mistakes that I've made in the past is that I tend to just, you know, click the button so quickly to where I'm trading within the 1 minute time frame, and within that 1 minute I'll have several trades in and out. To reduce my loss also, and in the same way, at the same time, I can train my eyes to look for better setup. If I get stopped out on a trade, I tend to walk away for a little bit, and just to kind of clear my head, to try to figure out why I entered a trade. And a lot of it is um, you know the number two rules really is to keep myself from over trading. And finally, it's just obey your stop. I'm trading CL. This instrument is a beast. So if you don't obey your stop, you will lose your shirt. Just leave it as that. So I think, let's see. I think I might have missed something. Oh yeah. Okay. So for the money management, one of the things that I put myself in is that I don't trade more than 10 trades per day. So whether that's one contract or two contracts or three contracts, regardless of the number of contracts, I tend not to trade no more than 10 trades per day. If you go back on some of my videos, I actually did I think it was like a random number generator for all the trades, and seems like 10 trades probably optimum for day trading. So, and you really don't want your broker to be rich, so you want to be rich. So 10 trades is more than I could I allow myself to have, and this is a good discipline because my experience in the past, and this is only this is what experience will teach you, is that the longer hours trade or screen time you have, the more lessons you will get. So for me, if I exceed more than 10 trades per day, that really means that I'm just not really in sync in the market, and half of the time, or actually about 80% of the time, I'm really just trying to get my money back kind of deal. So I know when I'm really not really in not really my best, and this is kind of my indicator. And I do look at these, while I'm trading, how many times I've traded already. So so that is a good way to measure your skill, is you allow yourself certain amount of trades per day, and if you get stopped, either you hit 40 ticks, or for me at least, I'll either hit 40 ticks or I exceeded this amount, and at that point, I just pretty much kind of walk away from my machine, and call it for what it is. I mean, it is what it is. If you lose, you're done. You just pretty much just walk away. Um, and I think that's that for the rules. Let me let me see what other question. Let me go back to the other slide. So so let's see. The next question is what are my methods? I think I think I'm not sure what this really mean, but I guess that's I'm assuming that's trading method. So as far as method is concerned, may want to go back to my other videos. I'm a pure price action kind of guy. I support resistance, supply and demand kind of deal, and I'm starting to slowly incorporate a little bit of volume profile in my trading, but I didn't want to complicate it any more than that. I mean, really, price would dictate everything. Volume would come second, and as far as volume profile is concerned, is I tend to trade where there's no volume activity, so which I think might be contradiction to the other um, beliefs out there, because I mean, if there's already volume there, then I tend to shy away from those. I like the areas of supply and demand basically, and I mean the chart would tell you, would kind of tell you where that would be, so and a lot of that mainly really is screen time. So if you teach your eyes, if you spend enough time trading, you'd see, these areas, and a lot of it, I do, if you watch my other videos, I do simulate these. I try to get data from it and just do a spreadsheet analysis of price, back it up with math and science, right? So and I find, if I can support it with mathematical or statistical numbers, then to me, I mean, we're pretty much here to put odds in your favor, right? So if you're trying to develop a method, or at least for me, if the methods that I've developed in the past is, not only from what I could see, but also it's backed by some statistics or some math. So anything I see that I know I might able to use for trading, I always back it up with some kind of form of math. How can I measure success on these things? So I think you might see that on some of my videos. So I recommend that you go back or just kind of look at some of the videos I made on on those studies. So as far as blog is concerned, this is going to be kind of, I guess, a back end um, plan that I have. I am looking into maybe one day, because right now I'm not sure if you know, but you know all the tradings that I'm doing is really part time. So I do have a full time job, and maybe one day, you know, I mean, blogging is certainly might be in my arena, just because, you know, so I can get away from my machine and not watch the chart all the time, especially when you're in a trade. Typically, you know, when I get on a trade, I put them on, and then the creating the video helps because it keeps my hand really focusing on the trade. Rather, I'm trying to explain my trade process as I go through. So making the video certainly does help. Um, and basically, I don't have a blog, more like a video blog, or I guess I don't know what you would call that. But anyways, I appreciate the questions. Certainly drop by anytime. If you have any other questions, just let me know. I'm willing and more than happy to help out. Anything I can help you with, just I appreciate you stopping by, taking the time to watch the videos. If you have more questions, just let me know. Until then, I'll see you in the next video. Take care.